We talk here at Nomad Capitalist about moving to Puerto Rico, even expatriation, as ways that Americans can legally and permanently reduce their taxes both on their income and on their capital gains. But what about U.S. investments? I'm going to tell you what you need to know right now. Hi, I'm Andrew Henderson. This is Nomad Capitalist, with a channel and the company that helps 7- and 8-figure entrepreneurs and investors legally go where you're treated best. Here's a question that Mark asked. He says, Andrew, I've watched a lot of your videos and was wondering if you can clarify something for me. It seems that while many of the countries you discuss have zero or close to zero income taxes, even if you get citizenship in one of those countries and at the same time renounce your U.S. citizenship, you will still be subject to U.S. taxes on any income derived from U.S. investments, which may be used to support your lifestyle in the second citizenship country. Is that correct? If you renounce citizenship, how long can the IRS continue to tax you on your U.S.-based investments which produce income? Now, a couple of things that stand out to me here that I want to cover before I answer directly the tax part of Mark's question. Number one, the U.S. allows for dual citizenship, and so having a second citizenship, obtaining a second citizenship, is not necessarily an act that causes you to lose your U.S. citizenship. Many people put their citizenship in their back pocket. It's a plan B. They may never even move out of the U.S., let alone expatriate. You can do that. The other issue is, he's saying, well, what about using the income from investments to pay for your life in your second citizenship country? And then he also says zero taxes. There are a couple second passport countries that do have zero income tax. However, what people will generally do is they'll get a second passport from a Caribbean country or from their ancestry or from a country they've lived in or a paper residence, whatever. They're not going to live in that country when they expatriate. And so therefore, it's really the tax policy of the country they're moving to more so than the country they become a citizen of that matters. And so many people aren't living in their second citizenship country. You get a passport in St. Kitts, and then you go as a citizen of St. Kitts and get a residence permit wherever it is that you want to live. And that might be, in addition to to St. Kitts, that might be the zero or low tax country. So a couple things there that are important. Now, you can renounce your citizenship and you can avoid U.S. taxes forever, assuming you don't have certain U.S. investments. There is a myth that did apply in the past, earlier this century, where once you renounce, the IRS would continue to follow you around and tax you. Not dissimilar to what a couple of countries around the world do, where if you want to become a tax non-resident, retain your citizenship. If you leave Norway, for example, or Mexico, and you go to certain countries that they call tax havens, they will continue to tax you for X number of years. The IRS did that. They just said, hey, no matter where you go, we're going to tax you. That stopped, and now you can file your final tax return. You can file a form, basically an expatriation tax return, and you can get out of the system once and for all. Now, once that's done, you're no longer being taxed as a U.S. person. However, the United States, like pretty much any other country, if you're investing on their soil in a certain U.S. Source, income-generating assets, is going to continue to tax you. So you can get out. The IRS can leave you alone. You have to file the proper forms. You've got to do the proper exit tax planning. And the final tax you pay may indeed be that exit tax along with any final income tax on your final split your tax return. But if you have U.S. real estate, for example, if you are earning dividends from U.S. stocks, they're going to continue to come after you. Now, one of the things that I've said is, hey, invest in stocks that aren't in the U.S., that aren't in Canada, that don't have some of the tax issues that those countries have. Go to a country that has no capital gains tax, i.e. Singapore, and look at investments there. That's not my financial advice to you, but from a tax perspective, it makes things a little bit more clean. Now, simply getting certain types of dividend income may not require you to actually file a tax return, but if you have U.S. real estate, they're going to continue to come after you. Now, what people often tell me is, Andrew, I'm not that concerned about my U.S. real estate because I have so much depreciation. Certainly the rules change a little bit when you're no longer a U.S. person. There's certain exemptions that you don't get, but you can continue to own U.S. real estate. You can potentially continue to get U.S. mortgages, albeit potentially different terms. That's something people should do, is if they're expatriating, talk to their mortgage lender. Am I allowed to be a non-U.S. person with this loan? Those are things that you should also look at. But that U.S. source income, from a rental, is going to be taxed. Capital gains aren't going to be taxed generally, but if you have dividend income, that may be taxed, and that's going to come into where it is that you live. And so it might be worth, if you have a lot of dividend income, Mark, choosing a place that has more favorable dividends, looking at a tax treaty to reduce your income tax accordingly, rather than getting stuck with the highest possible rate on dividends from U.S. stocks. There are other types of U.S. Tax that may be applied. For example, here on YouTube, creators are taxed based on income earned from ads run to their U.S. audience. And so, we've had people who are YouTube creators, and some of them, most of them, rely on selling, in video sponsorships, or they have a business on the back end as we do. But if you're running ads, stuff like that, that can be an issue. If you're selling a book on Amazon, that can be an issue. So there's certain types of things where selling into the U.S. can be an issue, things like royalties. Otherwise, even if your business sells into the United States in many conditions, e-commerce perhaps being a bit more difficult, but other businesses being pretty straightforward, you don't have to pay the U.S. tax if your business isn't in the U.S. So there's a whole lot of things that go into that. But yes, on U.S. source, i.e. on the U.S. soil, U.S. companies, things like that. If you have a C Corp, I have some founders who they have VC money and they've set up a C Corp. And under a lot of those structures, they're going to continue to pay some U.S. tax, perhaps not personally, but at the corporate level, they're going to pay tax. What you also want to be aware of is the issue of possible estate tax if you have U.S. situs assets. And so when you pass away, how are those assets properly structured? How are you structuring your real estate? How are you structuring your U.S. stocks, your brokerage accounts? How are those held? I had an interesting conversation. I won't name the brokerage firm, but a well-known brokerage firm told me, oh, no, we don't worry about owning U.S. stocks as a non-U.S. person. I talked to like 3 different accountants and tax lawyers in our network, and they said, they're crazy. Of course. The guy said, I can show you proof right now from another big brokerage firm. They actually sent money to the U.S. when this guy died. So there are a number of taxes that you want to be aware of. And again, where you live, treaties, those may play a role into it. Now, here's my answer. And again, not financial advice, but this is just what I would do. If you own, I've had day traders, for example, or short-term traders, where they're in and out of U.S. stocks, just capital gains, no dividends, nothing like that. That's pretty clear-cut, not a big issue. I've had people who, they hold for the long term U.S. stocks, and again, you want to properly structure those to avoid an estate tax. But I've hold or change the type of ETFs, whatever you're buying, to be non-U.S. but holding U.S. stocks. But if they're holding them and there's no dividends, if you're just holding growth stocks, that could be fine. Where you get into more trouble with stocks is dividends. Again, U.S. real estate could be an issue. There are other things that could be an issue, certain debts. And so if you have a stock, maybe you just like to hold whatever U.S. stocks, but my suggestion is why not go out and look what's out there in the world? Look at my portfolio this year. I am more an entrepreneur at this point than an investor. I do a lot of investments, but you look at my portfolio, India, one of the better performers. You look at some other emerging markets have done well thanks to currencies. The U.S. portfolio has done well as well, and whatever I do in the U.S., I do outside of the U.S. But why not look at markets where they don't have capital gains tax, maybe even at all? They don't have estate tax. They don't tax dividends. And so, one thing that comes up is why are you leaving the U.S. in the first place? Why are you expatriating? For some people, it is purely tax. For a lot of us, it is just don't trust the place, don't like the place, generally think there's better opportunities somewhere else. In which case, go and take part in those opportunities and move some of that capital that is supporting you with income. Find perhaps a better income-producing opportunity somewhere else. Find a REIT, find a dividend-paying stock, find a whatever in another country, and avoid the issue altogether. If you want to go where you're treated best, you can stay and you can keep those U.S. investments. They'll be happy to keep your money the same way any Chinese or Indian or Venezuelan guy could invest in the U.S. as well. But you have to do some more careful tax planning than you would if you were investing in some of these more laissez-faire markets. And so the answer is you can get out, but you have to do some proper planning as to where your investments are. Don't stop now. We've got well over 1,000 more videos here on YouTube for you to watch and learn how to go where you're treated best. And if you want to work with Nomad Capitalist personally, go to nomadcapitalist.com/apply, learn about our unique, tried and true process, garnered over years of experience, and learn how you can become our client.